Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy financial advisor Ross Clark says U.S. employment was better than expected. Trends Journal publisher Gerald Celente says the world's economy would be much better if nations put their efforts into peace instead of constant warmongering. We'll talk to Ross Clark right after this.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome to This Week in Money, Ross.
Yeah, it's nice to be back after a bit of a breather.
Employment numbers in the U.S., what have they done to the markets?
Excellent numbers on the U.S. side. Got an increase of 211,000 for the month of November. Not at the heights of October, but ahead of expectations. And that's with a upward revision on the previous month. So that really puts Fed in a position where they can raise interest rates. Yellen has been talking about economic numbers for ages here, and that is the key. And definitely this should be enough to give them the rise they've been talking about on December the 16th. So with that, the U.S. dollar, which had been very weak in the previous 2 days, just turned on a dime and had a pretty good move. And but you know, we have to look at the bigger picture on the dollar. The good run out of the summer topped out right at the March highs here about 4 or 5 days ago. And up in what we call a rising wedge pattern. That's where the highs were moving up, but a lower pace than that the lows were coming up underneath. So it's just wedging itself in, and it looked as though it was ready for a good correction. I don't think we've seen the end of that. I think we're going to see the dollar probably correct 3 to 5% off the highs, consolidate, and then be ready to resume its bull market. I'm still looking for good movement in the U.S. dollar index. The index is sitting around 98 and change right now. We're going to be targeting in the 109 range sometime in the first half of next year.
What's that going to do to the loonie? I've heard it could go as low as 55 cents.
Well, Canadian dollar is without a doubt sees pressure. We've got commodity prices, in particular, if you do an overlay of the CRB index that's and the oil market and the Canadian dollar, it's tough to tell them apart over the extended periods of time. And with oil and OPEC positioning the way they are right now, the Canadian dollar is just basically going to be fighting, an uphill battle. And I don't think we're going to see too much in the way of big rallies. 2 or 3 centers are what I've been thinking would be the maximum. In the last little while, we've had difficulty doing more than 1.5 cent rallies. So there's more to be had, I think, on the dollar for the downside.
What's happening with gold?
Well, when you get the reversal in the dollar, and we had a real convergence of things coming together. The strong U.S. dollar ready for a reversal. You ended up, and this is for an interim correction. You had the commitment of traders numbers just do a dramatic decline here in the last 5 or 6 weeks. We went from having 157,000 net contracts long by speculators, and in a process of that short number of weeks, we're now down to 9,750 contracts. This is about as dramatic a drop as you will ever see. And the commercials on the other side, they were short at the October highs, about 165,000 contracts. They're down now to 2,900 contracts. So with that type of a break and the severity of it, you will invariably see a price reversal, just because so many are now back on the sidelines. The positions have been cleaned out, and it only takes a little bit of positive news to turn things. And in this case, it was the U.S. dollar. And so if we look at the week this week, gold made a new low, multi-year low down at 1046. And has closed the week above last week's high. So we have what we determined to be, or call an outside reversal week, and that should have legs to the upside for well, I would say the better part of a month, maybe a shade beyond that. But the upside resistance levels are still pretty important, starting maybe around the 1120 running up to 1180.
Well, I was wondering why the price of gold hasn't jumped, because the demand for the physical product has gone up considerably, up 207% in the U.S. in the past year.
Yeah, I mean, we hear about that, but, supply, demand may be there, but it's what are people willing to pay? Are they happy to just buy the dips all the way down? And the key when you're in a trend is how well do you manage to have your price do during the rallies? If you can't get up through significant resistance levels, and I remember back in the 1980s, 1970s when gold was trending down, then we were also seeing some pretty good fundamentals showing up, but it's until you can start to move through your first levels of overhead resistance that you may see value, but you're fighting a trend, and trends are some of the most important things out there when it comes to the marketplace. One thing I do like to see in the short term here that we've seen is that the miners, starting about 3 weeks ago, were clearly outperforming the bullion. Bullion was edging down, making these lower lows, and the mining indices, the Huey, the XAU, GDX, all progressively moving higher for the last 2 to 3 weeks, even as we moved into lows, and that's indicative of what you see around interim bottoms. The weakest of the stocks within the complex have also been seeing the classic tax selling pressure, where those who have got tax losses want to bank them and use them against any other capital gains they may have. So the weakest ones continue to see a weakness into that period. And on the other side of the coin, the strong ones, and there's a good 4 or 5 names out there that are still up on the year in the mining sector, the precious metals. They've had an exceptionally good week, and I think that you'll continue to see the poor ones have the strongest short-term rallies, but no sustainability, and the better ones will just continue to edge themselves higher.
Ross, thanks a lot for chatting with us.
I always enjoy being with you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. If you have any questions for Ross, you can email him at ross.clark@cibc.ca. Coming up next, Gerald Celente on This Week in Money.
Always consult your investment professional before making any investment decision. See singing impressionist Andre Philippe Gagnon.
And I think to myself,
In Oliver, December 29th. In Kelowna, December 30th. Buy online and save at ontourtickets.com. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Gerald Celente, publisher of the Trends Journal, which you can find online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, welcome back to This Week in Money.
Thanks for having me, Jim.
Are there trends from Black Friday, and what do you see ahead for retail sales?
Yeah, the Black Friday sales are disappointing, and they're down, and there's a reason for it, and that is that median household income in the United States is below 1999 levels, and you have a labor force participation rate at 38-year lows. So people don't have money. You look at wage increases, they don't exist. They only keep up with inflation. So we saw Black Friday, you could see it coming, actually. I've been around a long time, and there never used to be a thing such as 50 to 75% off in the several months leading up to Black Friday. And then you saw right after Black Friday, Macy's, for example, announcing other sales of 50 to 75% off. So they have too much product and not enough people to buy it. And it's not only because of the Internet. That's only a small part of it. And even Internet sales on average, what was spent was on lower cost items rather than in the larger categories as in the past.
Now, corporations over the past decade have done their very best to cut workforces, reduce salaries, reduce wages. Did they not think that by doing that, they were going to reduce their market as well?
Well, it's a good point. They don't think like that. They're bottom line thinkers. So bottom line thinkers tend to become, the kind of people that they only want to boost the profits for themselves and don't care about the rest of the people who they're hurting. So, you can see with the wages, on and on. You look what's going on in the auto industry. The auto industry's thriving, but not the auto workers. And of course that, one time the auto workers obviously used to earn a pretty good wage, probably overinflated at one point as, things go out of balance when any group gets too much power. But there used to be a place called Detroit, and it was called the Motor City, and it was a thriving place at one time. So now you look at it, and it's in shambles, and it reflects really the, from Motown to no town. No dough, no good jobs, and the wages that they pay aren't living wages. Here's a fact. This is a fact. Over 50% of Americans earn under $30,000 a year. That's not enough money to make it on with a family. And so you don't have that kind of spendable income. And again, you look at the stocks, you look at the numbers coming out, it's one after another. Gap, Macy's, Kohl's, Walmart. All the stocks are going down because the products aren't selling as well as they should or need to be.
Also, I wonder, are consumers onto the fact that many retailers boost their prices in October and early November, so when you get to the end of November and they have a sale, it looks like you're getting a break, but in reality you're not?
Yeah, that could be part of it, but again, people just don't have the dough. They don't have spendable income anymore. Look how many young people are living at home because they can't afford, apartments. You look at apartment prices, in the last several years in the States, they've gone up, some, 35, 39%. And when you calculate the whole period of wage increase over, a similar time, you're up about 18%. So you just can't keep up with it. The medical expenses in the States are exorbitant. There's just too much money going out, not enough money coming in, and the retail sector is going to continue to be hurt by it.
Well, I think I saw a survey that found something like 42% of young American women still live at home. So much for the guy in the sweatshirt living in his parents' basement. It's a young woman in a sweatshirt.
Yeah, we wrote about this actually. We saw the trend coming in my book Trends 2000. And I'm going back to 1996. You could see this becoming in play. And we call it the re-extended family, and showing how people weren't going to be able to move out of their homes because of the declining income. And it really began in earnest following NAFTA. Because what used to happen was that people that didn't have higher educations could earn middle-class incomes by working in the manufacturing sector. But the manufacturing sector has basically dried up. And when you look at the real numbers, for example, in manufacturing, they're pretty bleak. They created, for example, the new numbers came out here in the States on job creation, and it was over 200,000 jobs. And only 2,000 additional workers were added to September and October's manufacturing employment. And, and manufacturing employment actually fell by 1,000 in November. So we're looking that manufacturers have added, no net new workers in a year since January. So this is where people used to get a living wage. Now you don't have that anymore. You have the service sector. And what are they making? They're lucky if they make $10 an hour.
Yes, muck jobs for all the oil jobs that have been lost doesn't really help out, does it?
No, and that's just going to continue to get worse. Now, when you look at the oil numbers coming in over here, on Friday, for example, you had West Texas, pop below $40 a barrel. And, those are numbers that, who would have thought that? Go back to a year ago, June 2014. Well, you're looking at Brent at, about $115 a barrel. And now you're talking about Brent being around $43 a barrel. And then you have to put all this stuff together too. You got to look beyond the North America. You take a country like Saudi Arabia. They need Brent at $100 a barrel to break even on their budget. And now they're issuing debt, floating bonds. And then you look at the geopolitical destabilization going on in the Middle East, and all of these countries like Qatar and United Arab Emirates and Kuwait and Bahrain and Saudi Arabia, who, when the Arab Spring broke out, they quieted the people down by shoving more money down their throats. And now they got to start pulling back on that money. And you think people like being ruled by a king, or an emir? These are dictatorships. So when things start breaking apart, it gets ugly. And by the way, it's worldwide. You're going to start. You'll be seeing. Forget part of the refugee crisis is caused by America and its allies, the coalition of the killing, that have destroyed places, that used to be thriving at one time, or at least, you had Middle East and North Africa countries that used to be stable, and many of them prosperous. But what happened? The United States, Canada, UK, and a coalition of the killing overthrew Gaddafi, overthrew Hussein, or trying to overthrow Assad. So that's the refugee crisis. The people leaving because of bombs. The other people leaving because they have no jobs. So you're going to see a human wave out of Ghana, Nigeria, Niger, from Argentina to the Cape of Good Hope. You're going to start seeing heavy flows north from all of these resource-rich nations that are now suffering because of low commodity prices. It's not only in oil. You're looking at iron ore. Iron ore and copper, for example, are two indicators of industrial growth and real estate growth and infrastructure growth. You're looking at iron ore prices now they're hitting under $40 a metric ton. You go back to 2011 when they were peaking, the commodity prices, iron ore almost hit $200 a ton. You're looking at copper at 6-year lows. You're looking at commodity prices on average down, according to the Bloomberg Index, to 1999 levels. So what I'm saying, Jim, is all these people from Colombia, Venezuela, Chile, South Africa, Ghana, Niger, Nigeria, they're going to be flowing north looking for work. You put that on top of the refugee crisis, you got some big problems ahead.
Is there any way to keep those people at home?
Well, there's something, I don't want to be assassinated or ridiculed or put my life in jeopardy. How about peace? How about you think that would bring some money back into the systems rather than waging all these wars that are draining it and destabilizing governments? But you're not allowed to say that anymore. Over in the UK, that little war criminal over there, Cameron, they just sent troops over now into bombers, rather, to bomb Syria. You're going into a foreign country. Who gave you the right to go in there? Who gave America the right to go in there? You're not allowed to do this. It's against international law. So what I'm saying is, yeah, you bring prosperity back. And peace and prosperity go together. It's not a throwaway line. And you start building economies rather than destroying them. But nobody wants to talk about it. And you're criticized if you are. Not a peep about peace. Everybody's pounding the drums for war. So the more the war goes, deeper economies go down because they're wasting their resources and destabilizing areas. So if you had all these areas thriving, you'd see more production. But that's not the way it goes. What you're seeing is more destruction. And again, it's not a popular thing to speak about because, as I said, the UK is staging bombing raids in Syria, and they have no right to be doing this at all.
We'll have more with Gerald Celente next on This Week in Money.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking to Trends Journal publisher Gerald Celente. Gerald, what trends do you see in the equity markets right now?
Well, you're seeing them. You're seeing a lot of volatility, and it's not going to go away. Again, it goes back down to these slumping commodity prices. It's the canary in the global equity market mine. The commodity prices and deflation are happening because there's too much product and not enough money and people with money to buy the stuff. It's a slowdown. And what you're looking at as well on top of that is you take countries like Brazil. They're in what's now being called a depression. They're comparing it to the 1930s. Again, a resource-rich nation that's not exporting anymore. And what happens? Their real is down, about 40% against the dollar year to date. What does that mean? Well, all that debt that they have, a lot of it's in dollars. They have to pay it back with their currencies declining, as is the rupee or how about the Canadian dollar? What is it down? Almost 25% against the U.S. dollar?
74 cents right now.
Yeah. So over that in year to date. So what I'm saying is now you have to pay it back in dollars as interest rates are going up. What does that mean? Well, you're going to get the money because your commodities are selling for less. So the only thing that's holding up the equity markets is the cheap money that they're pumping in. And you look back to last week, what happened a few days ago when the European Union's Draghi didn't throw as much quantitative easing in there as they wanted. Yes, they're extending the bond buying period till March of 2017, but they didn't increase it over the 60 billion euros a month that they're slogging out of the market. And what do they have now? The negative interest rates at minus 0.3%. This is unheard of in history. This has never been done before. But even that's not enough to keep this thing going. So at some point, we believe it's going to collapse. It should have collapsed years ago. But they keep coming up with these schemes. Again, negative interest rates, negative yields on bonds. So at some point, it's going to collapse.
Well, negative interest rates have never existed before. Have they ever thought about the long-term consequences, or are they just throwing it into a basket, shaking it, and hoping something falls out of the bottom that's good?
They're making it up as they go along. They've never done this before, as you pointed out. There's absolutely no such thing as negative interest rates. And in bonds, too. There's never been negative yields on bonds before. You're going to loan somebody money, and they're going to guarantee you're going to get less back. And you can't make this stuff up. But they are. And that's what they're doing on and on. You go back to the Fed minutes. They wait 5 years to release them. Here in the United States, the land of the free. We're not allowed to see what a private bank that's running our financial system said until 5 years later after everybody forgets what happened. But you read the Fed minutes that went back to preceding the panic of '08. It's right there. One loser, liar, coward, fraud, and freak didn't know what was coming down. It's right there for everybody to see. Yet they keep saluting these people, looking up to them, bowing and scraping. It just shows how brilliant they are. Every one of these clowns are brilliant. But yet you look back at the Fed minutes, they didn't have a clue what was going on. And they ridicule people like myself and say, oh no, this thing's coming down. Oh, you're a gloom and doomer. You don't believe the little BS that we all like to believe because we're a bunch of cowards and we can't think for ourselves and we salute the presidents, prime ministers, and chancellors and we love our politicians because we're gutless little clowns. So people don't want to call it what it is. They don't want to call sociopaths, psychopaths, murderers and crooks and thieves who they are. So don't forget to vote.
What do you see ahead for other markets, gold and silver, for example?
Gold is, took a little bounce back. Again, gold is different and silver are different than the other commodity markets. As I mentioned, you're looking at commodity prices now down, to 1999 levels on average. So, why? Because there's a lack of demand. Too much product, oversupply of product, and not enough demand. That is not true with gold. The facts are there for anyone that wants to look at them. U.S. demand, for example, for gold bars and coins this year, it's up 207%. Around the world, according to the World Gold Council, demand rose nearly 10%. Global jewelry demand in places like India, up 15%. In China, investment demand grew 70%. Talked about the refugee crisis going on in Europe and the destabilization around the area. Demand climbed 35%.
Gerald, how can we explain low gold prices then if there's so much demand for the actual physical product?
Well, again, as you keep going on, the central banks, they're even buying it. They're near a record high level for the same period last year. Why? Because they're rigging the markets, and that's not a conspiracy theory. We know they rigged the LIBOR markets, the interest rates, the Forex markets, the currencies at a tune where they traded $5.3 trillion a day. They were rigged. It's not a conspiracy theory, it's a fact. 6 banks are convicted of felonies for rigging the markets. But of course, they never go to jail because, they're the crooks that are running the show, so they don't go to jail. It is not in the best interest. I just mentioned what the ECB is doing with buying their bond buying scheme going on. You've seen what China has done with their continuation of trying to pump up their markets, whether they're in any way that they can, lowering interest rates, lowering bank reserve ratio requirements, one thing after another. The Bank of Japan, how many years of Abenomics have been going on? They're still in a recession. What I'm saying to you, Jim, is that if people realize that all this digital money, not worth the paper it's not printed on, was declining in real value, people would be pumping into gold, bailing out of the currencies, and it would cause a panic. They're doing it with the naked shorts on the exchanges. The trading of gold on the exchanges has nothing to do with the buying of physical gold. And the numbers are right there for anybody that wants to look them up. Again, demand in the U.S. up 207%. 207%. You look at, again, and this is only, third quarter. Global demand up nearly 10%. One after another. So demand is there. They're buying it. They're keeping the prices low because people would freak out if you saw how worthless the currencies have become. Again, I'm not making this stuff up. The numbers are there for anybody to look at. They've pumped in 20 years, basically, of monetary stimulus and credit expansion done at lunatic levels. You're looking at a debt bomb of about $250 trillion. You take a country like China. In 20 years, China's debt went from $500 billion to now $30 trillion. You think they're going to be able to pay that off? So that's what I'm saying. They're keeping this down because it's all, it's all being pumped up by fake money. China's official GDP, in 2008 was $5 trillion, and now it's soared to $30 trillion. That's how much stimulus they pumped into the market to try to keep this phony game going.
Canada's new Prime Minister Justin Trudeau says he wants to increase taxes for the top 1% that give a break to the middle class taxpayers. In other words, people who make between 40 and 80 grand a year. Is that realistic, or does that just again deflect, defer, deny?
No, it does. In the United States, we used to have a 90% tax rate, for the very rich in the 1950s, and it was a thriving time. And you have all these companies that are escaping taxes with all these tax loopholes, that they're doing overseas deals. So, why not? You look, for example, you have 85 people in the world. I'm not making this up. 85 people have more money, you ready, than 3.5 billion. Look in the United States. 400 people worth $2.5 trillion. Yeah, they could pay a lot more.
We'll have more with Gerald Celente next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Gerald Celente, publisher of TrendsJournal.com. Gerald, any thoughts on the U.S. presidential election race? So many people are watching Donald Trump, but is it because he's so good at putting his foot in his mouth?
No, you go back to our Trends Journal, the spring edition, and the cover was Liars, Cowards, Freaks, and Fools. Welcome to the presidential reality show. And that's all it is, a reality show. And that was before Donald Trump became a contestant. And he's a professional reality show champion. It's a freak show. And he's just another freak. And we picked a winner back in March of last year, Hillary Clinton. She's going to keep playing the woman card, and more women vote than men. And Trump is already being labeled misogynist, so a lot of women aren't going to vote for him. And then when you look at the data, more women voted for Democrats, particularly Obama, in his last two elections than they do for Republicans by some 10% more than men. So you're going to start seeing more. She's playing the card continually. I'm a grandmother. My mother was a mother, and my grandmother was a mother too, and my grandmother's grandmother. And I ever tell you that, and it keeps going on and on. You hear women saying it all the time. I'm voting for Hillary because she's a woman. It's no different than, voting for a candidate because you believe in his ethnicity or his race. So people do that. They go to the lowest common denominator. They could despise her for a lot of reasons, but they'll vote for her because she's a woman. And Trump isn't going away because Trump's running against nobody. And, I began my career, by the way, Jim. I used to run, at a graduate school, I ran political campaigns in Westchester County in New York, the richest county in the United States at the time. And I was the assistant to the Secretary of the New York State Senate. I was so good at it. They were grooming me. And I designed and instructed American politics and campaign technology and taught it at St. John's University in New York. So, I have a history of knowing this stuff from the ground floor. So I know how they play the game. It's a very simple one. And most people aren't tuned in. They're only tuned into sound bites. So as it's going now, it's either Clinton or Trump, Hitlery or Hitler.
If you were starting a portfolio today, Gerald, where would you put your money?
I don't give financial advice. Speaking for myself, I'd be among these people of the 207% that are buying gold and silver, particularly gold, because silver also has to do with production of manufacturing, and gold is more of a safe haven / jewelry item. And so I would be putting my money in that. And that would be it right now. And to see how things start unfolding, because you could see the volatility in the markets. I mean, you look at this last week, Dow's down 250 one day, up 300 the next day. You look at oil prices, you're up 3.5% one day, the next day they're down 2.5%. You look at the commodity prices, so there's a lot of volatility. So to me, again, only speaking for myself, by the way, we're on record. You could go back for 2 years now. We had said from the beginning that we saw the bottom of gold at around $1,050 an ounce. $1,500 an ounce.
Sure, and people laughed at you for saying that, right?
Yeah, well, no, because people thought it would go lower even. And what we said from the beginning is that yes, it could go down. That's as far as we see it, because it's cost about that to get it out of the ground. So they're not going to sell it for a loss, unlike oil or these other things that they have to sell at a loss to keep production going. So that to us is the bottom. We're near it. The upside, we still see well over 2,000. This thing is going to collapse. It has to. Again, they've inflated a debt bubble, the likes of which we have never seen in the history of the world, part one or part two. We're talking about negative interest rates. Never seen it before in any time in history. So it's one of these things after another. Again, we have a debt bubble that's about $250 trillion. Again, you're looking at China alone with $30 trillion of debt. So, it just cannot sustain itself.
Can the European Union hold on, or will it disappear?
I think the European Union is going to break up at some point. I really do. We said that when it was formed. And you're going to see more and more resistance, particularly as economies decline, refugee crises grow. And you're even seeing blowback, for example. The Eastern European countries aren't accepting the refugees. They don't want them coming into Poland and other Eastern European countries. They're doing a lot to stop it, going against the agreements established by the European Union. It's going to be a big issue, and you're going to watch what happens also in Spain with the Catalan movement, moving away from Spain and the secession movement, and you're going to start seeing more people like Le Pen and others gaining more and more popularity, particularly as the refugee crisis increase. And this so-called, this war on terror thing. People, by the way, no one's speaking about how have people become radicalized. What did it? Again, most of my life, we never heard of this stuff before. Before Bill Clinton and his buddies and George Bush Sr. started, blowing up the Middle East and Yugoslavia. So you think you create radical situations? If you lived in Iraq, 1 million people were killed, a country that was relatively prosperous is now in total ruins, you have no future, you're 19 years old, everybody you love has been killed, you think you could possibly become, quote, radical and go out of your mind? Nobody wants to talk about it. But instead they're addressing it with more violence. We're going to bomb them, I tell you. All this bombing is doing is destroying cities. That's all it's doing. How about a nice Dresden, huh? I got it. Why don't we do another Hiroshima or Nagasaki? That's how sick these people are. And they keep getting away with it.
I know I saw a documentary about where the Syrian refugees are coming from. Well, it doesn't matter if ISIS blew up their house or the Syrian government blew up their house. The fact is, they have no homes, they have no businesses, they have no jobs, they have no hope there.
Exactly. How about Iraq? How about Afghanistan? How about Afghanistan? Longest war in American history. We did a whole Trends Journal, not a whole one, but a portion of it. We broke down Bush's speech on 9/11, the evening, and 9 days later when he addressed the nation. And we began it by saying only a madman would speak these words, and only people dumbstruck by terror would believe them. Not one fact in there. Not one fact as to why we were going into Afghanistan. There's a man by the name of Osama bin Laden. Oh, yeah, that was formerly the Mujahideen, wasn't it? Hey, wasn't the Mujahideen created under Jimmy Carter? and Ronald Reagan to fight the Russians in Afghanistan? Oh, that one, I mean, look what's going on. How could people support this? Peace is so unpopular. Again, you go back to the UK Parliament and what they were talking about. Anybody, and this is from that little lowlife of a human being, David Cameron, his assertion that those that oppose the bombing, you know what he called them? Terrorist sympathizers. Quote, terrorist sympathizers. I like that little guy to call me a terrorist sympathizer, man to man, and people look up to this clown, and there are no protests. Look at that little piece of rot, Hollande. Look at his popularity rating before this terrorist incident in France. It was the lowest in the history of the Fifth Republic. And now, just like Bush after 9/11, poof, it's up 17%. And kids are joining the military and they're waving flags. And a week before that, we wrote about it. The Charles de Gaulle aircraft carrier was already on its way to Syria. Read the comments that came from people when the terrorists were killing them. This is for what you're doing in Syria. But the prostitutes don't report that. No, they just hate us because they hate our freedom and liberty. Matter of fact, even that lowlife of the foreign minister over there in France, he said that they hate us because, quote, we dance. This little piece of junk over here in the United States, Marco Rubio, at the last presidential debate, game show, beat the clock, 90 seconds to answer the question, and 60 seconds for a response. The reason the terrorists hate us, quote, because we send our girls to school. They hate us because women drive cars in the United States, and the crowd cheers. Yeah, they couldn't hate you because you killed over 1 million of them, you destroyed their countries, you left them with nothing in your back. Oh, look at that Obama, no troops on the ground, huh? Yeah, go back to 2014, June and September. Yeah, pull it up. Listen to him. No boots on the ground in Iraq or Syria. Hey, they're back. Well, I never said that. I meant American people knew. I meant battalions. You're a liar. You lied about everything. Hope and change you can't believe in, huh? There, that Obama. Anyway, the people have given up. They're cowards and courageless. And they'll keep supporting the people that destroy their lives and steal their money.
Gerald, I know you feel the mainstream media doesn't tell people the truth. Where do you try to get your information from?
Well, I get it from all the media around the world, and I just break it apart. I look at it and analyze it. So when somebody says something, I take that quote, and I look at it, I look at the data. The data is usually, is it questionable? Of course it is. But I only can work with what we have. So I work, I'll go to the Israeli, I'll go to Haaretz, Jerusalem Post, then I'll go to Fars News Agency and the Iranian side, Al Jazeera, Gulf News, I go to China Daily, I go to 3 different Chinese sites, then I'll go from the Air Force Times and Stars and Stripes, and then I'll go on the other side to, Truth Out and Common Cause, so I cover everything. All I want is the information. And then after going through it enough, you find out, well, this sounds about right, this I don't believe, this sounds. And so you keep, but again, it's making connections between different fields. So, it's from, healthy home to discover the networks. It's one thing after another. So it's multidimensional. And again, I'm a political atheist. I try to give a diagnosis. It doesn't make me negative or positive. It's what is. So I just look at things for what they are, not the way I want them to be, always with the understanding that current events form future trends. You know what they should have in this election? They should be they should be demanding a cabinet position for a secretary of trends and consequences, because they never look at the consequences.
Gerald, how can people find out more about the Trends Journal?
Trendsjournal.com, trendsjournal.com. Of course, our main site is trendsresearch.com. And with the Trends Journal, we also do Trends in the News video broadcast each weekday night. And we have the Trends Monthly, Trends Quarterly. We're coming out with the top trends of 2016. You're not going to want to miss those. And, of course, we also have a Trends This Week. So it's really the only place where you're going to find the truth in trends and history before it happens.
Gerald, thanks a lot for chatting with us.
Thank you, Jim.
My guest has been Gerald Celente, publisher of TrendsJournal.com. That wraps up our show for this week. Thanks to our guests Ross Clark and Gerald Celente, and thank you for listening. Comments or questions for the show can be emailed to info@howestreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.